Good morning, everybody. Today is Wednesday, July 12th, of course, and it's like a market holiday. It's like a holiday for traders. Maybe not in the sense that we get the day off, but it's an exciting day nonetheless. It's like, it's one of those days that we look forward to. Or maybe not if you're not a fan of volatility. But CPI, here we go. It's time to buckle up, locked and loaded, right? In about 15 minutes, we will be getting the numbers to come out. And we'll see how this market reacts, right? We will see how this market reacts. So we know that we've got to kill some time before CPI, right? It's never makes too much sense to do a bunch of technical analysis ahead of the number. So, we're not just going to do nothing for 15 minutes, but we'll take it slow, nice and easy, relaxed pace for the first little bit here. All right? So with that said, we'll ease into the chat. We'll ease into the economic calendar, and then we'll continue along through our normal process here. Who's here in the chat? So we've got Michael Cobble, Mickey, Paul, Leroy O'Neill, Pete and Repeat, AP is in the building, Katie Baby, the Lioness. We've got DP, Jeep for Life, the Nomad Trader, Safe Options, Trader Jihan Park, Roger Tutt, David Ball, Todd Scholes, Philip M. We've got Henska. We've got ML, B-Dog. Dude, where's my guitar? That's classic. Luke B is in the building. Brian Trade, Sammy Sam, Swipe, DB, Kentucky Living, Ketchup Kings, Starlight, Astro Nerd, Mora, Kingdom, John Cardoza, LSC, The Lobo, Chart GPT, that's a cool name, Chart GPT, Infornity, Rebecca F. Siege, Davey Day Trader, Dennis, who else? Scott, Sammy Sams, Jay Hicks, Andrew Smith, good morning, Dwayne, Green Thoughts, Karen. Good morning, everybody. Darth Buddha, John, INF, the based homie, of course, is here. The other John Taylor and John Wilkening as well. Wisdom King. Everybody's here. Everybody's here. Good morning. TP Wave, I see you as well. Nice. Jim and stuff. Gotcha. All right, let's get started. Again, easing on into our data. That way we can see what the CPI results are this morning. So, speaking of CPI, speak of the devil, right? There it is, 8:30 in roughly 12 and a half, really. 12 and a half minutes, we will be getting the CPI data month over month, year over year, and the core. And we're looking for 0.3 on the month over month, which is a slight uptick from the prior. If you guys recall, we kind of went through this brief spiel about seasonality. I think on Monday, we talked about seasonality. How we did something like this, and then CPI started to slow down. But as we start to do this, when you compare back to here, right, that is going to account for your 0.3 on the month over month, right, as it slowly starts to return to normal. So Fed's fighting inflation. They're still fighting inflation, don't get me wrong, with these rate hikes. But as seasonality maybe picks up a little bit here into the warmer months and we uptick, right, are we going to move back to a normal pace? Are we going to exceed the pace? Is it going to look really aggressive based on what we had prior over here? Those are the questions to kind of consider, right? So that is the main takeaway from CPI. Do we see those like base effects start to come in? And then core wants to be 0.3 as well, which is going to be underneath the prior. So you're not really getting that out of this. And of course, we know that services inflation is the big deal to watch out for. Services specific to housing. Services specific to housing. So we shall see. And once again, it's not really our job to predict, what this number ultimately is going to be. We'll leave that up to the quants, the analysts, the people who study economics, but our job is just look at what the market's reaction is to the numbers and kind of make a game plan from there, right? So we don't want to get too invested in the actual number and say, oh, this is wrong, inflation is doing X, Y, Z. It's like, you might have your individual story about your localized market and how food prices are and rent or mortgages, housing prices, whatever. But if the numbers are the numbers, right? The numbers are the numbers, unless they get revised. So that's it. CPI, we'll get that in now roughly 10-ish minutes, roughly 10 minutes. PPI comes out tomorrow. It's always on the heels of CPI. Unemployment claims, Waller is at 6:45. That's a non-event. And then on Friday, consumer sentiment and inflation expectations, early morning, 10 a.m. as the market's already open, of course. So that's your economic calendar. We all know that we're here because of CPI, potentially. That's the title of today's video. It's the big headline. Not from CNBC, though. CNBC is actually not so concerned about the CPI print, and instead, you can see their focus is on the more divisive headline, of course, which is about the strike from, I don't know about strike maybe, but I guess it is. Depends on how you want to interpret the image. But the auto industry, right, bracing for a contentious contract talk as the UAW formally kicks off bargaining. So we'll see. We'll see. We shall see. Some other more divisive headlines, but they are stock specific. So this one's more like industry specific. You can talk about, Ford, Tesla, GM, those types of things. But over here, you get, of course, none other than Miss Warren for the image. But Google and Meta get customer data from tax prep firms, and lawmakers want a probe. That is not right, right? You can't be taking data from tax prep firms. I guess you can, depending on what the individual signs when they release their information to the tax prep firm, and whether or not they're secretly agreeing in a 900-page document that their data is free to be sold to Google and Meta. So that is that's a different story for a different time, but nonetheless, the takeaway is if there is a probe announcement on Google and Meta, the stocks probably don't respond too favorably to that. There's a difference between wanting a probe and actually kicking one off. So just keep that in the back of your mind, right? Keep that in the back of your mind. What else? Chipotle tests a robot to prep their avocados to make guacamole faster. So unfortunately, if you're working over at CMG, it's not looking good. The future's not looking good. Robots are going to take over. And next thing you know, the avocado toast is going to be a little bit more efficient. They can bring down prices a little bit, be more competitive, and they'll sell at the margin. Maybe. We'll see. What else is going on here? Stock-specific stuff. SunPower shares can more than double after a recent sell-off from Raymond James. So big upgrade to solar here. Illumina hit with a record $476 million fine for closing the Grail deal without the EU regulatory approval. So again, if there is a probe over in Google and Meta about this whole tax prep firm thing, and the result of the probe is like, we're going to do something about it, then maybe that's in the pipeline for Google and Meta, but their legal teams are going to probably drag it out for a long time, and it's going to get wrapped up in like this multi-year cycle. Maybe. So that's how I envision it playing out, at least, right? It's not going to be this clear cut, yep, we did it, here's your money, let's move along. I feel like they would fight that one. Speaking of more legal issues, right? The Mike Division. Microsoft Activision ruling highlights the struggles to fight tech, right? It just shows when you've got, I don't want to say unlimited money, but pretty darn close to it. When you've got almost unlimited money, you hire the best people, you have the best practices, and these things just continue to, again, when I was saying they get dragged out, this has been dragging along for how long now? Quite some time. Demand for lithium and other critical minerals is skyrocketing, but supply concerns linger. So that is inflationary, of course. Bezos, unable to compete, at least yet, with Mr. Musk. His Blue Origin rocket engine exploded during testing. So it's par for the course, right? When you have an R&D company, it's not, Starlink, or not Starlink. SpaceX and Blue Origin, they're not for-profit companies yet, right? Maybe they will turn into something down the line, but right now they're just R&D companies, basically. So you're going to have explosions like this. Is it a setback? Does it make a headline? Yeah, but is it the end of the world? Not really, unless they killed a bunch of people in the making, which doesn't look like they did. Otherwise, that would be the headline. So that's that. What else? Stock-specific stuff. UBS upgrades Netflix price for a 20% upgrade there. 20% to Netflix. Google exec Urs steps down from executive management role amid a cloud shakeup. So Google in the headline twice here for, I don't want to say iffy things, but definitely not positive, bullish, hey, everything's fine and dandy, rainbows and butterflies type situations, right? What else is going on here? Stock-specific stuff. New IT spending survey bodes well for the 7 tech stocks in the AI cohort, so they're illustrating that it spans from AI to cloud to cybersecurity. There you go. So big spending over in tech, which again, if you think that the AI mania is only a mania, just remember that AI is far beyond. We've talked about this over and over and over again, so I'm not going to go down that rabbit hole. But it's more than Chat GPT. So keep an open mind to that. What else? General Mills is paying this agriculture tech startup to help make Cheerios greener. Help make Cheerios greener. That's interesting. What else is going on here? More mortgage pain over in the Eurozone, specifically in the UK. Monthly costs could jump £500. That's not that's not nothing. That's certainly a lot. It's quite a bit. So interesting stuff over there with the continued rate hiking campaign. I don't know what the monthly cost, I don't know what that's all about. If they're implying future loans that are going to originate are going to have a higher cost, then yeah, that makes sense. But existing loans, I don't know why existing loans would jump €500 or pounds, excuse me. Anyways, bye-bye baby stores set to shutter as Go Global's deal to save the chain falls apart in the 11th hour, so goodbye to the bye-bye baby. Google quietly ditched plans for an AI-powered chatbot for Gen Z. I think that was probably... There shouldn't be a chatbot for... Let a private... I guess Google is... It's public, but it's obviously not government funded. But let some private company build a chatbot and let it fizzle out. I don't think Google wants to be involved with a chatbot. Right? I think it's just a bad look for the company. Why would Google want to own a chatbot, that talks to Gen Z? I don't know. See, like, the only reason I could see it is to collect more data. That's the only reason. Okay, so Europe has adjustable rate mortgages. Okay, that's good to know. I didn't know that they had arms, right? As Verified News is put in the chat. I didn't know that was the baseline of their system over there. So that's kind of interesting. Thanks for the update there, chat. And that's that. So that's stock specific stuff. And I think we've done a good job of eating up some time. We've got 3 minutes to go until we get the CPI data, which comes out. And what do we see on the earnings calendar? So nothing really this morning here. Of course, it's CPI. That's what we care about. But Herman Miller, after the close. Before the open on Thursday, that's tomorrow, of course. And then after that, the next day is Friday, just in case we're losing track of these things. But anyways, Delta, Pepsi, that's where I would keep my eyes. Maybe Conagra, just because it's a food supply, right? So CAG, the ticker on that one. So keep an eye on those three. That would be my watch on Thursday. And then Friday, it's all about JP Morgan. We've talked about that. The banking sector kicks things off. Earnings season is upon us. So let's go on over to a split screen view of the CPI. Again, I love this little UX upgrade that Forex Factory did with the countdown timer. It's great. So we'll leave that kind of as is, and I'm just going to do this real quick. So bear with me as I adjust for our data drop here. I'm just going to go to a 15-minute chart, and then we'll start talking about some expectations for CPI, right? So I'm not in the business of forecasting where the number is coming in, but I will make some comments, of course, about what I think the market will respond with. So if we're a big miss on CPI, I think that the market may not perform as bad as you think. I think that the reason behind that, of course, is just that it would be a clear-cut sign for Powell to say it's one more hike into the end of the year, not two, right? If CPI heats back up and it starts... excuse me, what am I saying? It's the other way around. Jeez. Man, I will be fully transparent here. I'm not running on too much sleep. I had a big project actually continue along last night after the Zoom call that we were on. But anyhow, oh man, Powell will have to be more aggressive with the rate hikes if we get this, so it will cement the idea for two, not one. That's kind of what I was getting at. So with two more rate hikes, market probably doesn't respond too favorably for that. We know that the idea is down. What I meant to say was that a neutral reading, like at expectations, if we're at expectations, that's where I wouldn't really expect the market to freak out. Just noting that, again, if we're at expectations, it's more like, okay, let's be data dependent. There's more of that opportunity for Jerome Powell to say, maybe we actually don't want that second rate hike. So above by a long shot, we're definitely getting the second rate hike. If we come in at expectations, I would think that Jerome Powell is like, he pulls out the data dependent card, and then anything underneath is just like, okay, fine. Market's probably going to be, I think maybe some of this is being priced in from the move from yesterday's afternoon session, and obviously this pre-market minor gap up that we're dealing with. So here we go. In roughly 5 seconds, we will be getting these numbers, and we'll see what the market's reaction is, but those are my general thoughts on what CPI could potentially do. And there we go. Big move in the upward direction. And we'll let this simmer out, of course. So I would have to imagine that inflation is moving in the right direction based on the initial reactions here. Initial reactions look pretty bullish. So come on, Forex Factory. We've got this pending thing going on, which, again, it's cool that they've gone through this update. So, wow, look at that. Year-over-year CPI comes in fantastic underneath the forecast, which is already a long shot underneath 4.0, a full point in the downward direction on the year-over-year. Month-over-month comes in at 0.2, as does core. So really, really bullish reads here on the CPI, which is quite interesting, right? So inflation is coming down. It's coming under control based on the CPI print, at least. This is a big step in the right direction. This is exactly what Powell wanted to see. And once again, yesterday's afternoon move higher, the pre-market move higher leading into this number. I thought that, maybe some of this would have been priced in, but I think the big beat was the year over year. That comes in at 3 instead of 3.1, which is already pricing in 90 bips of progress basically on the inflation front. So, pretty solid, pretty freaking solid. And I forget who it was. Was it Tom Lee? I think Tom Lee said that there was an opportunity for, remember this headline? I think it was from Monday. The headline read Tom Lee's pricing in 100 points of upside if CPI comes in at or below expectations. And Tom Lee, my man, he kind of nailed it. So there's that. And with that, we've also got some generosity in the chat. We've got some big time generosity in the chat from TK Nut, 66. TK gifting 20. I'm not misspeaking here. That's not a typo. That's 20 memberships gifted. So I think that's too many to read off all in one go here, but man, very, very generous of you. So I appreciate it, obviously, because in some form that's supporting the channel, but everybody who has gifted a sub, congrats. So very cool, very generous. That's awesome. All right. CPI is out. The prints have printed. We know the numbers. We know what we're dealing with. Massive beats across the board here. Pretty bullish from that perspective. Underneath. Looking good. And remember that the month over month, even at a 0.3, the market can afford to have a couple of 0.3s sprinkled in. When we're getting 0.2s and 0.1s, that's really combating inflation, right? So let's go on over to this graph, and you can kind of see this, right? Let's think about a time prior to when everything got flipped upside down in here, right? We all know what this is. But in the past, right, you can see that you get some of these reads occasionally that on the month over month are quite high, right? The baseline reads that stay kind of in this zone, those are the ones that you want to see, 0.2, 0.1, right? That's really indicative of inflation and price stability. I should say inflation receding and price stability being restored. So that's really what Jerome Powell wants to see. I think that, he's going to have some comments about that, I'm sure, in the meeting about how CPI came in. Now, one thing that we do want to see, and I'll bring this up on another tab, is housing specifically. So let's do that now. I'm bringing it up on another tab here. Bear with me. Let's go to latest release. Where's the latest release here? All right, here we go. Latest release from the BLS, and then we'll get on over to our technicals, right? Because that's really what we care about here. All right, so up 0.2% in June on a seasonally adjusted basis, which is what we wanted to see. Remember, we wanted that seasonal adjustment. If you take out the seasonal adjustment, it might be a little bit higher. But anyways, what else? Okay, there you go. Over the last 12 months, you get 3%, which is actually what we saw on the annualized. That's before seasonal, so that's good to see. Index for shelter here. So just some comments from the wire. Index for shelter was the largest contributor to the monthly on all items, accounting for over 70% of the increase, with index for motor vehicles insurance also contributing. Food index increased 0.1%, 0.2% from the prior. Energy's up 0.6%. That kind of makes sense as you get demand for AC and whatnot. Springtime is usually a lull because of the natural air temperature, and you go from there. But anyhow, here is the what we wanted to see, and where is housing? Shelter right here, and we want the June numbers. There you go, 0.4. So it's a step in the right direction, but it's still not great, right? We're seeing them slowly subside, 0.6, 0.4, 0.4. We want to avoid the 0.6, the 0.8, the 0.7, the 0.8, right? This is unsustainable, this is unsustainable, so on and so forth. So it steps in the right direction, but it certainly still needs to come down. It's no doubt in my mind that services inflation continues to be an issue. There's your fuel cost, also a big inflationary metric for June, specifically gas, right? So anyhow, that's again a little bit more fundamental than what we typically look through. You can read these reports if you'd like. If you're interested in this, I'm just going to drop this report in the chat a couple times here. I know some folks are really, some folks look for the reasoning behind every move in the market. It's nice to understand it, but it's not required for every little, for at least as a day trader. You don't need to understand every little nuance that's there. It's good to have a general idea. So anyhow, that is what we have, and before I forget, I will turn on the banner, and we will get started with our ES analysis. I mean, look at this. Where's our next gray bar overhead? 46.50. 46.50. Are we going there today? I'm not convinced. All right, let's do what we do best. 4-hour time frame chart. 4-hour time frame chart. Let's go ahead and take a look over here and see what we can see. So, I mean, undoubtedly, this move cements the overall, this move cements the overall 4-hour uptrend. Why does it do that, right? Let's think about this logically. We have lows, higher lows, higher lows, higher lows. This is now cemented, confirmed. No ifs, ands, or buts about it. This is a higher low. We have equal highs. We know that the pattern is now potentially something that looks more like this. So everybody who is talking about this, breakdown of the head and shoulders, everybody who is talking about this, breakdown of the double top, screwed. Absolutely ran over. Shorts, squeezed. Underwater. No matter how you slice the cake, your best position shorts at the very tippity top of the double top, at the head of the the head of the head and shoulders. No dice. Underwater with this current move from CPI. So, with that said, obviously, markets are poised for either continuation or you want to see a hold over the top of this level. Now, we are dealing with a gap. We'll talk about gap rules in just a moment, but it's worth understanding that the 4-hour trend is clearly being cemented in the upward direction, right? Very, very bullish market right now. I'm pretty happy, pretty pleased, to be honest with you, about how our analysis has been going in the weekend updates. There was a lot of people are on board with the analysis that we presented, but there's always going to be the couple of bad apples who are just like, oh no, this market's crazy, it's overvalued, it's going to zero. Or I got one comment on Saturday, and I'm not complaining about this, of course. I'm just pointing out the nature of traders, and it really does speak to a larger audience, right? There's still a bunch of people out there who believe that this market needs to be lower. And again, a very specific comment I got was like, this is delusionally over-optimistic or something like that. And I'm just like, I don't know how you could say that because I'm just reading the price data. But, is this delusionally over-optimistic? I mean, the market's moving in the upward direction here. So before we get too far ahead of ourselves, we need to understand that we're opening on a gap up here. Excuse me. There we go. Nice little sip of water. Fixes that. But we're opening on a gap up here. I don't think it's delusional to be bullish in this current market context. When we're dealing with a gap up, though, almost just like yesterday, we might want to be open to the idea of gap fill reversal as being our primary means for entry, right? Primary means for entry. So that's my first thought. But overall, 4-hour trend has cemented now the higher low with the now higher high, right? If we think about trend counts, we finally got the second piece of the puzzle. With a higher high, as long as we open up over this double top, we will be producing, I should say, a higher high. All right, 1-hour time frame chart. What else can we learn about the market structure that sits beneath us? Is it strong? Is it weak? What's the deal here? Well, I would say pretty strong, right? We definitely got gap fill reversal on yesterday's session. We held up. Whoa, sorry for the zoom there. What's going on here? Thinkorswim, play nicely, please. Please. There we go. We got the gap fill reversal yesterday off of the level. It did test a little bit underneath there. I'm not going to lie. It wasn't a thing of beauty right off the prior high of day, but for the most part, if you were watching or if you were in the Discord, You know that we had an inverted head and shoulders there that Sammy Sam so kindly pointed out in the chat, and it was off to the races, right? There was a nice little breakout and the end of day squeeze we talked about on Twitter, value, and we talked about this. I'm almost, again, real glad that we discussed it on the stream yesterday morning. When value cannot get overlapping to down in the prior day's range, end of day rally in odds increase dramatically, and that's exactly what we saw there. So overall, very pleased with how the market's been acting recently. It's been, I don't want to say status quo, but given the interpretation of these sellers as not being strong, I think that the correct calls have been made here for buyers remaining in the driver's seat. So hourly, it looks good. You can see that we're clearly getting a higher high, and from there, that's that. Let's take a look at the 15-minute chart and see what we've got for our 3 questions on this morning's interpretation now that the CPI is out. We will go fishing for some upper targets here. Bear with me on that, but let's do our 3 questions first and build a game. Actually, that's so backwards. Why would I even think about saying that? We should scout for targets before we go through the 3 questions. That way we're prepared for okay, if the upside outcome is this, X, Y, Z, right? So let's do this together. You guys know this is the deal. Always extended off, and we've really got to go back far in time to find something here. Let's try. It's probably got to be more than a year. Yeah, we're above this prior pivot high from back here, right? So that's been recaptured. We're well above that. The overnight is pushing into that overhead level. I think on the hourly, what we'll see is just this area, which is up here. Let's see, what is that? It's going to be adjusted when I turn the extended hours back on with the recent contract data. Let me try it this way real quick. And what we'll do is we will scout for what it should be based on regular trading hours data. I would have to imagine that I already properly input the level, and that's why it's there. So that's this zone up around 45.30. 45.30 could be in play, ES, on the upswing. 45.30 strikes me as being reasonable. You get your prior intraday highs in this zone, also prior intraday lows, which led to the breakdown point. If I was trying to be the most precise, I would probably care most about where this breakdown came from. So let's zoom way in on this thing. Make sure that we're being fairly accurate from that perspective. Yeah, I think that this actually does a decent job of capturing the zone that we want to care about. This is a really large zone, right? Especially for our ES. This is, how many points is this? 44 from 24, let's call it. So it's a 20-point range up here. That's not beautiful, but remember, we discussed this on one of the weekend updates. I think it was maybe 2 weeks ago now. On one of the weekend updates, we were talking about how back in here, remember the VIX floor back here was north of 2050, right? Back in this zone, VIX was trading north of 2050. What does that imply? It just implies that it's probably accurate that this zone is 20 points and not the 5 or 3 that we're used to under the conditions currently, present day, where the VIX is sub 15, right? So that's just a little note here on why the level is perhaps so wide from the past, but that's very clearly the zone. It's the proper level to be looking at in here. All right, so that's right around this 45, 44 on the upswing, and then 24 on the downswing. So it's a big range. Totally understand that. But in that zone, we want to just be a little bit cautious. Beyond that, the next range really opens up further towards 46.50s. That's the higher level that we were just discussing, the pie in the sky level. And again, I thought that there might have been something in between there, but there really isn't. There's nothing in between to really cover that is worth pointing out, right? If I zoom in on this, whatever day this was, way back in the day, when was this? This was April 21st, 2022. Obviously, nasty red day there, and it was a bearish engulfer. It gobbled up this day, and we went straight to hell in a handbasket from there. So those are truly the numbers. Those are the upper targets. I thought we were going to be able to fish for something that would have been a little bit more relevant, but that's the structure we're dealing with currently. So with that out of the way, I'm going to drop this back down to something much more reasonable, like a 90-day, and there's our hourly, right? So if we just scrunch this up, we know that this is the large overhead zone. Let's extend that a bit. Sorry for this. This is some housekeeping that a more responsible version of me would have done ahead of the stream today, but it's worth walking through together. That way we understand, right? So there's your really large overhead range. I think that there's the potential, if markets do continue, that we get towards it, and then you would just watch. What I would do, just as a general rule of thumb, just going to drop it down to the 15 so we can see this. as the market moves towards that area, I just probably wouldn't be thinking about new money longs, right? I wouldn't be thinking about new money longs up here. If we get opening range that breaks out or something like that, there's definitely a reason to take the long here, or like if there's a lack of gap fill or something of the sorts, then there's a reason for the long at these highs. And we'll talk about gap rules, of course, in just a moment, and the fact that we should go with gaps that don't fill. But as we get into the gray zone, I would be skeptical of new money longs and perhaps be on the lookout for any signs of slowdown via double top, via head and shoulders, via just nasty inverted hammers, right? Anything that's a fake break. So if we do put in flag consolidation and it's looking like a bull flag, and then we take out the top of the flag but come back down inside, that's a pretty big red flag, right? Obviously, that starts to build out. Head and shoulders, right? One failed pattern just emerges into another pattern. So anyhow, that's the big upside zone. And once again, I wish I had something more precise for you, but we just looked at it together. There really isn't anything more precise. It truly is that large of a range. And remember, the VIX is responsible for that. Okay? So with that out of the way, let's ask the 3 questions and stay on track for this morning's open. We've got 8:45 on the clock. We've a little bit pushed out because of CPI, but I think it's well worth it, obviously, with the reaction that we've gotten. So question number 1, are we opening in or outside of range? Obviously, this is a very clear-cut answer this morning. We are opening on a true gap up, not even close to your prior high of day, which is 44.80. Just as a reference point, we're currently trading at 45.04. So gap rules are definitely in play, but before we move along, oops, that's supposed to be an R. Before we move along to question number 2, I just kind of gave you a big hint there. This morning should be about managing expectations to some degree because the size of the gap is so large. The size of the gap is so large, it's roughly 25 points, if we just use round numbers here. 25-point gap can be fairly difficult to trade, right? And remember, the reason for this is because you have too many sides of the trade conflicting. It's not so clear-cut closer to the prior high of day. You have old shorts, old money shorts, who are stuck from down below, who are going to be closing out, obviously, right? And as those, quote, old money shorts close out, they turn into what? They have buyers. And I'm just going to walk through this because I think it's important. Buyers from old shorts, so I'll put an OS here. You also have new money buyers who are enticed by the gap up, the higher prices, and say, great, inflation's subsiding. The Fed may, be less aggressive with their rate hikes, right? Maybe, it's not necessary that we go up to that 5.6 terminal. So you get new money buyers. I'll put NB, new money buyers here. And then you also continue to get the opposite side of the spectrum, the other two, which are you get new money sellers thinking of this as a gift to sell the higher prices. So I'll put NS, new money sellers. Then you get old buyers who are closing out, right? So those folks will turn into sellers because they're old buyers taking some profit. You could put TP here as well. So regardless, you have all 4 of these forces combining this morning. So on 25 points of gap up, you may get more of nothing as opposed to a sharper and easier gap close for the morning. All right, so that's something to carry forward here as the 9:30 bell comes around. So that's the illustration of why we need to manage expectations. But let's continue to do what we do here, which is walking through question number 2 and 3 to build a complete game plan for the session. So question number 2, where are we opening in relationship to the not previous, you can tell it was a late night, to the overnight range. There's the overnight high, there's the overnight low. Obviously opening towards the overnight high, which does mean more of a bullish indication, but risk reward, as we always say, is better when we're opening towards that overnight high. So with that kind of in place there, and with question number 2 giving us better risk reward, I would say that the gap fade can be on the table, but once again, because of the size of the gap, just manage your expectations. We might get a partial gap fill. We'll talk about the 50% retracement and how it may, just may, if my eyeballs are calibrated this morning, coincide with your prior highs, the double top highs on the ES. We'll take a look on the hourly, or I'll zoom it out or something like that. But nonetheless, it could be here, the 50% gap fill. Question number 3, last but certainly not least, overnight inventory. What is overnight inventory? Is it net long, net short? To do that, you extrapolate the settlement. Same thing as saying the close, how much time above, how much time below. Net long by the tune of, 99.9%. Right? 99% net long overnight inventory. What does that tell us for the open? There can certainly be some inventory correction. So that ties back to gap rules. Yeah, you could look for a fade here, and it would be reasonable. It would be reasonable that the overly net long inventory could correct a bit. So What are the gap rules? How are we going to trade this open? Let's walk through the framework. Here we go in 3, 2, 1. Take a mental snapshot because it's gone. There we go. So if we open here, step number 1 is to always look for the gap to fade, right? Rule number 1 of the gap rules is we're looking for the gap to fade. We're looking to see if prices can correct the overnight inventory and come back down and re-tag up. Think of it like baseball, tagging up to the prior high of day. Now, I'm not a big baseball fan. I played lacrosse in my younger years, so a little bit of a beef there, but the analogy does make sense. We're looking to tag up, and tagging up would be your prior high of day. So if the gap is going to fade, the framework, of course, as we know, is we need to fail the overnight high, meaning that we are not getting price acceptance above, because if we are getting price acceptance above, then even the longs with the worst trade location up here do not have a reason to close out. The only people with a reason to do something are shorts from back here or longs from back here who want to potentially, collect some profits, if you will, on the long side. The shorts are taking their loss, right? So anyhow, there's nothing to really be done with these folks. If we're over the overnight high, they're content. New money buyers are content. Longs from back here are content. They may or may not decide to take profit. So there's no reason to look for a downdraft, aka a fade, if we're above the overnight high. Step number 2, take out the opening print. Why the opening print? Screens go from green to red. It's an easier time for big banks, institutions, hedge funds, pension funds, whatever. Call it big smart money, whatever you want to call it. It's algorithmically easy to say, okay, we are underneath the opening print. Screens are red on the day. There's some sort of algo that can pick up on that and run some sort of sell program or whatever. Doesn't really matter. You can be cynical about it. You cannot be cynical. The matter of fact is, obviously, markets are weaker when they are underneath their opening print because they are red on the day. So if we go underneath the opening print, we look for the gap to start to fade. And in a picture-perfect world, I don't know that we live in one, but in a picture-perfect world, the gap fill would be the full target at your prior high of day, 44.78. 44.78.50 is the gap close, all right? So does the risk reward there make sense is the only question that we have to ask ourselves, and the answer to that question is yes. You would 100% risk 1 to see if you could pick up 3 on the downside. That's a roughly 3-to-1 risk reward ratio there this morning. So the gap size is menacing. It does mean that we need to manage our expectations, but if the risk reward in the framework does pan out, there's no reason not to do it. All right? One of the things that could be in play here is looking for the 50% gap fill, right? And again, if my eyeballs are calibrated this morning, then I'm thinking it's roughly right along the lines of in here. Before I remove that white dash, let's take out the fibs and I will test my 20/20 vision. I don't even think I have 20/20 vision, as a matter of fact. I can't remember the last time I went to the eye doctor, but come on, give it up for me in the chat. I don't ask for much, but when the eyes are on point like that, when I get a 20/20, nailed it, 50% based on a visual, pretty darn good. All right? A little clap emoji. Appreciate that. So, all right, I'll throw that on my resume, right? Eyeballs extremely well calibrated. All right, enough with the pats on the back. The eyes are calibrated, but we get the idea, right? All jokes aside, this could perhaps be a key level. Right in this zone, because not only is it the 50% gap fill from the overnight high, of course, but it also represents, looks like I will have to grab those extra days. It represents the double top, right? So we're not going to be able to see that one. It's still off to the left, but on like the 4-hour time frame chart, we understand that this is the double top area. It's the top of the range. It's the most recent highs. So if we do come in and start to close the gap, but find support off of this level in here, then that I would also consider a very bullish indication. So bringing it back to reality after these jokes are aside, what exactly are we looking for? What I would prefer to see this morning is just like yesterday. I almost don't want to be overly aggressive on the downside looking for the gap to fade, as in like participating in that. I will fully stand by the analysis and say that yes, this is still what we're looking for in a picture perfect world. But do I want to participate in this, or would I prefer to participate in this with everything that's going on in the market right now? I probably think that it would make the most sense to wait patiently for your long somewhere down here, or obviously if the 50% gap fill is holding up nicely, right? If the 50% is holding, remember what that implies. It implies that the sellers are, quote, not doing their job, or at least they're weaker than they should be or could be, because we have zero structure here to basically hold the market up. If sellers are unable to push past the gap fill, or 50% gap fill, I should say, and the prior pivot top, the double top, whatever you want to call it, at 44.95. We'll use that number, 44.95 there. If that's unable to happen and we start to see an uptick off of that, then sellers are weak. Buyers obviously remain in the driver's seat, and you're probably going to continue to see a gap and go, right? Very, very bullish indication there. So I don't really want to be on the side of the market looking for a short, unless there's perhaps clear deterioration out of the internals, because we'll talk about that in a second here as well. And we're really going deep dive on the ES. I get it. We've got 8:55 on the clock. We're going to be behind schedule slightly, but it's worth walking through all of this nuance here. So I think it makes more sense to be looking for the gap fill reversal long here based on everything we've discussed. Half gap, right? That's bullish as well. And even the gap and go. So any consolidation and something that does this, that's on the table. So those are the three situations that I would prefer to see on this morning session. I don't really like getting some sort of continuation like this. Gets really, really hairy to trade into the open, right? If you just get like a first 5-minute opening drive in the upward direction, very, very tough to trade that, right? Because we know that we have a big overhead range. You're already buying on a gap to a higher high. Not really what you want to see, right? Some sort of like break and retest from the 4-hour perspective on the top, the double top, is really more preferable, right? So let it do its thing. Let it do this. And then over time, if we get something that does that, this might take, into the afternoon, into tomorrow. Might take a little while for the 4-hour break and retest to unfold, but very bullish market nonetheless. So looking for pullback buys at half gap, looking for full gap fill reversals, or opening range that goes to break, that's tradable in the upward direction as well. And I think that this may be more likely than you think because of the size of the gap, right? Because of the size of the gap, I would say. Raz is asking, would I sell my pre-existing longs? I would definitely take some profit on pre-existing longs. I wouldn't be all out. And again, I can't advise specifically exactly what you should do, but I'll speak in terms of like rough frameworks, right? On the gap up, it's a bullish indication. There's a reason to take some profits because we understand that there might be some inventory correction. But just remember, if you're on the bull side of the trade, there's nothing about this which is bearish. So there's really no reason to exit your long position based on like a stop out type of mentality. The only thing that you might want to do is take some profit. So whatever percentage of your pre-existing position that is up to you to determine, whether or not, you think we can get follow through. It's worth taking some profit potentially on a portion, but I wouldn't be all out if you're of the swing trade mentality, which I am not. So again, maybe I'm barking up the wrong tree here, but anyways, those are my 2 cents. Let's take a look at internals as a full dashboard here because this is important. And it's basically, it coincides nicely with what we talked about yesterday as well. So internals this morning will likely be far different than the minor gap that we saw in yesterday's session. Yesterday's gap up produced opening internals that were somewhere in the neighborhood of like 3-1, maybe 4-1 positive on the open, and they quickly moved to like 2.5 to 1.75. Right, so they did come in fairly aggressively, those internals on the open yesterday out of the nicey side of things. This morning, the picture is going to be completely different, and I'll send a screenshot in the Discord as soon as the market opens up. That way we can have like, a snapshot of history. But I would have to, and I don't mean historical like for the books, but just timing-wise. I would have to imagine that internals here, breadth-wise, open close to 10-1 positive. I mean, the gap is so substantial. It's on CPI as a catalyst. The rest of the broad market is also moving higher. I would have to imagine that a lot of the core list is moving higher as well. It's going to be a substantial upside read, right? So that's going to be worth noting, which is a far different read than what we got yesterday, which is going to be more difficult for it to come back down to earth, aka your 1-to-1 type reads. So keep a very close eye. Does this rapidly move back down to 1-to-1, or does it hold around those higher reads on the open? This is likely going to be opening, and by this I'm talking about the advanced decline line now. It's likely going to be opening up in or above trend higher zone with the size of the gap. Again, 25 points. We're talking about a 25-point gap up here, folks, in the ES, right? That's substantial. You're likely going to be opening somewhere up here, if not above. So that's worth pointing out. The tick is likely going to open well above positive 1,000. How quickly does it get to the zero line? Or, if not, does it just hover up here? Like a retracement to positive 800, positive 600, and then a hold without the move to the zero line, there's no reason why you would ever look to fade that gap, right? The market's too strong if that's the case. All right, so those are the brief 2 cents on internals that are worth pointing out here. Those are your key indications to be watching for from this perspective. So ES, I think we've gone mission accomplished. I think we kind of understand the frameworks here. Let me just point out a couple of things. If the market does fall off of a cliff and move deeper into the prior day's range, I still don't think it's the end of the world, because obviously we've produced a higher high here. Granted, it is a pre-market move, and I guess what would cement it would be the open up here. As we open up here, right? That's kind of the idea, that starts your higher high. But if we fall back down into the prior day's range, not thrilled, but not the end of the world. Not thrilled, but not the end of the world. What you would want to see is the same idea as yesterday. Where do we hold up in terms of value? Does value continue to build out higher? Is there more time that's spent up here, meaning that it's like a grindy day in the gap zone and then we break back down in? If so, right, it's not the greatest look, but value at least was above, not overlapping and down. All right, so that's a takeaway as well. So to sum it up on the ES with 9 o'clock on the clock, I'll just give you the 3 preferred situations. Situation number 1 that I would really like to see unfold is the full gap fill. I would like to see that way we don't really leave any poor structure underneath us that we could come back, or that could come back and haunt us in the future. Full gap fill reversal, we tag up, looks good. The second thing that I would like to see would be a partial 50% gap fill reversal here off of the double top from prior. That's probably more bullish, right? This repairs structure and gives us more peace of mind. I'll put PM here for peace of mind, not Philip Morris, but peace of mind. That's peace of mind. This is definitely way more bullish. BU for bullish, right? Way more bullish if we get the number 2 situation here. This is number 1. And then number 3 is like this. Then we get kind of hairy up here. That's more difficult to trade, which is why it's number 3. Harder to actually pick off an entry on that. And then number 4, which is way down here, it's so hard to see. It's just inside the prior day's range. It's literally a move into the prior day's range. Complicates the issue. You'd want to see more structure build out. All right, so number 1 and 2 are the most tradable in my eyes, and that's what I would prefer to see. So I'll leave you with that. And internals will complement which path we're ultimately looking for. It's all about path, right? Verified News says that the gap's not going to close. Yeah, it very well may not, right? It's a very strong market here. Obviously, the inflation numbers were way better than the expectations, I would say. If there's probably a situation to look for, like if I had to rank them based on what I think is going to happen, I would fall in line with number 2. Partial gap close, and then maybe either sideways to higher into the close. Partial gap fill, and then something like that. All right, that's the ES. First and foremost, before we move along to the NQ, John Cardozo with the 1999. Like the video. He's not wrong. Appreciate you, John. Thanks for tuning in and, consistent comments, consistent in the Discord. I mean, just the man. John, the man. So appreciate the 1999. Christopher DeMitt joining as a supporter. Apologies if I'm putting the wrong emphasis on the wrong syllable on the last name there, but thank you, Chris, for joining as a supporter. It's not unnoticed, and it is appreciated. So that's the ES. That is 903. Let's take a look at the NQ. Because we're behind on time, let's just understand, right? We'll do this very quickly. NQ, 4-hour uptrend. Did we make a new higher high over the top? No, we did not. We can also see that here on the hourly chart. Is it a concern? Not really. Not really, right? In the grand scheme of things, you're still building out the opportunity for this. Not so much anymore this, right? Double top. So that's kind of the higher time frame perspective there. We would just understand that like the ES, bullish, but not as bullish. No higher high there. Let's take a look at the 15-minute chart, and we've definitely got some more clear-cut levels to be watching in the NQ side of things. Let's throw our overnight high to where it belongs. We know that we're opening on a gap up. We know that gap rules are in play. We know that we're opening towards the overnight high. We know that overnight inventory is basically 100% net long. Those are the 3 questions answered in a speed round fashion. So what does that tell us for the open? Basically the same idea as the ES. Where's your 50% gap fill on this? It's probably lower. It's probably a little bit lower. I would say it's the lower bound of the gray bar, maybe closer to here. Just going to test that out, test the eyeball vision with the fibs. Oh, man. Pretty good. Pretty good. 2020 vision. It's coming back. It's coming back. All right, so that's in play as a zone. We know that to be 15,350. That's your half gap fill. The frameworks and situations will still be the same for the NQ. So what I would prefer to see is the full gap close. This is a monster gap, right? We're talking about just shy of 200 points. Just shy of 200 points out of the NQ. Typically, we say gaps that are 100 points or better are usually difficult to trade. This is almost 200, twice what we would deem a reasonable gap, right? So very large gap up, manage expectations. Today is a day to manage expectations. I would say if you're uncomfortable, this speaks to psychology. I think we've talked about frameworks for dealing with the gap in terms of trading these types of things, right? Failure of the overnight high, half gap close, looking for reversals in here. We're talking about double bottoms, inverted head and shoulders, hammer candles, whatever. We know that. But in terms of psychology, right, if this gap is a little bit intimidating to you or it's daunting and you're like, oh my God, like, I don't know, should I buy it? Should I sell it? Should I do this? Should I do that? Just let the market unfold on the open. That's my biggest piece of advice. You'll never regret, giving the market more time to develop instead of jumping in sooner. That's a takeaway here. You'll never regret waiting, being a little bit more patient than getting in sooner. I suppose you might kick yourself with hindsight, but it cuts both ways. If your intent was correct, you'll kick yourself with hindsight. If your intent was incorrect, then you'll be thinking, I'm such a genius, I waited, right? So it cuts both ways. Don't be deceived by the hindsight there, right? It goes both ways. So if you're a bit intimidated by the open, the size of the gap here, and you're like, I don't know what to do on the open, giving yourself more time as opposed to less is the better option there, right? So just keep that in mind. So overall, NQ situations, this would be like rainbows and butterflies because we repair the poor structure below us. Another sip of water, hang on. Excuse me, my apologies. So that repairs the structure underneath us. That's the most healthy for the market. This is the most bullish for the market. Here, 15,350 is the number. 15,350 is the number. And then straight up, opening range to break is the most, obviously the most bullish because there's no pullback, but difficult to trade. Where's the next overhead level out of the NQ? It's a pie in the sky target way up there at 15.7, and that's no joke. That is the target. Let's go to a 4-hour chart, and let me open this up to I don't even know if we're going to be able to have this on screen. Yeah, there it is. Okay. So we can see it, right? So this is your prior double top from back here. Notice on the breakdown, there's thin structure. There's thin structure on that breakdown. It's not like I'm, picking off a very specific level here or whatnot. No, that's the next level, 15,750 on the upswing. It's quite a ways away. Remember the idea and the reason that that's still a valid target is because of what the VIX was ultimately doing back then. So not calling for this all on today's session, but there is some substantial room to run overhead. We understand our NQ targets. We know our ups and downs. If we do move into the prior day's range, what's the idea? You find support here. Needs to find support 15,225. That's a line in the sand now for your next 4-hour high or low, right? If you think about, let's go to the hourly, I suppose. If you think about this chart right here, if you want to continue to see this pattern emerge as an ascending triangle, something that does this, right? Where's your next high or low? It ideally wants to be above structure, which would be here, 15,220. 15,220. All right, that's our ups and downs. Who else is in the chat here? David Flair with the 999 and Jay Hicks with the 999 for the Zoom call last night. Yeah, that was cool. We'll have to do it again, and I'll have to send a blast out there to all course members via email. That way we can all get on board. But that was a good time. Do I think that there might be FOMO from DK? Yeah, absolutely there's going to be FOMO. I mean, 100% there's going to be FOMO. If it's even a question in your mind, of course there's going to be FOMO. By that, I think you're implying, do I think that there's going to be a short squeeze or like just massive buying activity? It's possible, but remember from the illustration of the ES that you have 4 groups of people getting active up here, so it's worth managing your expectations and not just attaching yourself to the, okay, it's going to be buy, because you have shorts also coming in at higher location. You have sellers from profit taking back here. It's not just a one-sided story here at the top. So yeah, there's definitely going to be some sort of like, it's likely that there's going to be some sort of FOMO happening, but whether or not it's purely dominated by the long side is a different story. So that's the NQ. We know our ups and downs. We know our targets. We know that we have the partial gap close to here, roughly 50% at the bottom end of that range. Very bullish from this perspective, right? So NQs, we know the deal. We're probably being a little bit cautious on the short side. The trade is there. If you are a contrarian, now is the time to be a contrarian because you have at least tight risk up against the top here. You probably, on the long side, want to see a higher low above for your more convicted longs if you don't get this. So I'll leave the NQ with this final thought here. If we do see continuation higher, you are not chasing this breakout here. You're probably waiting for a retest above the top of the breakout pattern, the ascending triangle, because the risk, of course, is that we get something that does this, comes back into range, and then we search for the higher low here, or then we search for the higher low here, right? So just understand that as a new money long here, you have pretty bad location as a scalper. Maybe not so much if you're a longer time frame trader, but as a scalper, bad location. All right. What else? Let's go along and take a look at the Russell RUT. Very brief on the Russell. We're not going to actually. It's got to be done. It's got to be done. We've got to reference the higher time frame because the Russell is obviously not like any other index that we've seen. Yesterday, the breakout started. This is obviously adding on top, but the breakout started yesterday on the Russell. Really firm move, gap and go basically. Didn't look back, and that was a really bullish indication for broad markets as a whole. So once again, anyone who's saying that markets need to go to hell in a handbasket, your chance to shine was here, didn't happen. Your chance to shine was here, didn't happen. Your chance to shine was here, didn't happen. So not convinced that the bears have an overwhelming edge just based on what's going on from this balance range perspective. Large break yesterday. We are coming into resistance that is noteworthy. That is very noteworthy out of the Russell. If we think about a range double, we still have some gas in the tank closer to 2,000. But, as we come into resistance on a gap, might be worth managing expectations here again, right? Do you want to be the buyer of a higher high? Probably not. You want to be the buyer as we confirm through a breakout level or on a retest, aka a pullback to some level. So that's the Russell 4-hour. The hourly we know is very similar. Let's just go to the 15, and we'll talk about gap ranges here. I'll give you the numbers, and then we'll speed it up through the cash ETFs. So overnight high is in its rightful position, and that is that. Big gap up, obviously, opening towards the overnight high. Overnight inventory is what? 100% net long. So gap fade is on the table. All of those trades are still available here in the Russell as well. So something that does this is powerful. 1950 to 1945, treat it as a 5-point zone here with the volatility from CPI. It may actually need to resolve as a 5-point zone. May not be very clear cut at the top or bottom of that range. Partial gap close, we know this across the board. Across the board on every single ETF, every single stock that's going to be gapping up here this morning, as we'll see in just a moment. A partial gap fill is a very bullish indication. Sellers did not complete the task and close the gap where there's, quote, no structure, right? So that's something worth noting. 1950, 1945 out of the Russell. If we do see a pullback and we start to turn there, I would flip to being a little bit more bullish across the broad market as a whole. Anything further, gap fill reversal is off of prior high of day, 1931.30. Anything that just accepts up here is bullish, but I would not be fishing for new money longs as we're approaching on a gap prior resistance. Prior resistance, approaching it on a gap. Yesterday's breakout was solid, right? Nothing about that is like, hey, this is the opportune entry for a new money long. Even if the market does squeeze, right? Just understand your risk reward. Where do you place your stop loss? Always be asking that question. They say ABC, always be closing in sales. ABS, not your braking system. ABS, always be ABTS. ABTS, there's a T in there. Always be thinking about stops. Always be thinking about stops. Where does my stop go? If the market just starts ripping in here, are you going to long it here with a stop underneath low of day? If so, that's your risk. You've got to 2x that to make it make sense. Just understand that, right? Understand that. All right. So 9:15 on the clock. Let's get over to our cash ETFs through the upper edge of the SPY weekly expected move. Another thing to think about here. We couldn't see this on futures, but obviously we can see it here on the cash side of things. The market was only pricing a move in towards 444.48. That's a lot of fours. 444.48 was the expected move. Obviously, we can move through it. It's not an end-all, be-all area of support or resistance, but for the most part, once again, do you want to be more cautious or do you want to be more aggressive outside of the expected move? Probably more cautious. So partial gap fill, where's the 50% mark on this one? On the SPY, it's actually, man, interesting. 444, like if we pull back to that, so let's say we're opening here 446, that's the look. That's the look on the SPY daily. So understand that some inventory correction can take place here. Very bullish market as we continue to push still into those overnight highs here. Really, really bullish stuff. But nonetheless, understand that the inventory can correct, but there's nothing about this that is bearish in the grand sense of things. So I would be looking for long entries on a pullback if the market does start to come in a little bit here this morning. 444 is the prime zone to be looking for your partial gap close. Full gap close is obviously much closer to 442.50. Wouldn't want to see that. Ideally, we stay above the top of this structure here. Prior resistance, resistance, resistance now acts as newfound support for something that does this, right? So not a huge fan of chasing this still. Not my intent will not change on that. I will never really be an advocate for chasing a gap like this. You need some place to be thinking about where your stop goes. So, again, I think that this is what I would prefer to see because it's the most tradable. Now, whether or not the market gives that to us is a totally different story. This morning's open, I think, is going to be harder. I know it's going to be harder to navigate than easier. It's going to be harder than easier to navigate. It's not going to be a clear-cut XYZ, do XYZ, golden, right? Markets go into infinity. So this is going to be a bit of a tricky one to navigate here. Again, remember to err on the side of patience. Patience will serve you well in the long run. Knee-jerk reactions, FOMO, into either longs for continuation or shorts for a massive gap close. That's what'll hurt you if you don't have the proper structure in place for that trade to unfold. Be patient. Wait for the structure to build out. Wait until you've clearly exhibited a failure of the overnight high. Longs are not getting price acceptance above that. Okay, we're back down under the opening print. Now it's time to stab for a short, right? Be patient. Let that trade setup come to you. It may happen sooner rather than later, but err on the side of patience. The size of this gap is seismic. The size of the gap is seismic. All right, spider's complete. 9:16 on the clock. Let's see if we can get through at least the broad market by 9:20. It gives us about 3 minutes to go. I think it's doable. QQQ. What do we see out of the Qs? Definitely the same idea. Seismic gap up. Here's 370.25. We're obviously opening 372.25, which is up here, right? So very, very large gap up. Something interesting about this, which I wasn't pointing out on the SPY, but I think it's a little bit more so. It's more relevant on the QQQ, honestly, because we're still inside of this as a range, right? But think about last Friday. Last Friday was the day where the bears said Armageddon is coming. This market's going to hell in a handbasket. The fact that we're gapping over that high leads me to believe that the most optimistic outcome for the QQQ here to remain bullish, again, would be a partial gap fill. So we're not looking for your prior high of the day, but instead something that comes in and does this totally screws all of the shorts who are still holding shorts from Friday of last week, right? Anyone who shorted the very tippity top, kudos to you. You nailed it. But if we can hold that for support now on the flip side of the coin, that flattens those positions basically. And by flattens, I mean runs them over, steamrolled, adios, goodbye, right? So that would be the key watch for QQQ downside. 370.25, big inflection point for that exact reason. Again, understand that you have bad location here because we have not, like in the SPY at least, we've gapped up and over the level. So maybe if there's going to be a momentum breakout continuation, there's something going on there. But the QQQ has not broken out over the top of the range yet. So again, being a new money long here at the very top of the range does not set you up for good risk reward. As a matter of fact, it's the opposite, right? You have better risk reward on the downside for the pullback to unfold to get to 370.25, to get to the gap close with some sort of stop here, entry here if you can pick it off, right? So the gap rules are probably more favorable for the fade out of the QQQ. I would definitely be, if you are a quick draw McGraw on the open, if you are going to be aggressive, the QQQ is the place to do it based on the structure or the NASDAQ side of things, right? Could be NQ futures, could be QQQ. That's kind of where you want to be. All right, IWM. And then we'll be good for 9:20 on the clock. I'll do a speed round through the core list of companies. We'll just see what's in play with the gaps. So IWM, again, it's gapping off the screen basically on the hourly chart. We're opening 193.45. I mean, we're up here. We're up here in no man's land. Let's go to it. Oops, we want a daily chart. Let's flip time frames to a daily. What can we learn about overhead targets here? What can we learn? What can we learn? We probably want to be mindful of this rejection on the upswing at 194.50. 194.50. Okay, so that's a level to be aware of, and then obviously your highs up here, something to be aware of as well. 198.25. I'll round it. I'll go 50 to accommodate for those upper wicks. We would probably have to adjust that on the hourly, but you get the idea. So where are we opening in relationship to all of this? We're gapping towards this level right here. Once again, this as a range double does have some legs behind it. Can see continuation a little bit more firmly towards, just on an eyeball test, 196. Again, this morning's gap is so menacing. You could probably hear it in my voice that it's like, even I'm getting a little bit, not nervous, but I'm thinking to myself, I don't know that I want to be overly committed on this open to one particular side of the trade. I think it's a right in or right out, or right or right out type of situation on the open, literally, as the bell is ringing for, if you're going to try to fade that thing. And then I think it's getting some structure to build out. It's getting something up here. You need something. You need something. At least if we fail the overnight high, you've got some sort of stop in place for the short side, right? You can trade that downside outcome. So that's that. But very, very strong. John Cardozo is absolutely right. Very, very strong. Very, very strong gap up here. So I'm not convinced that it's just overly an obvious short. Whenever I get like this in the stream, it's a very clear indication to myself. And, it's probably annoying as a viewer because you're like, I just want to know the levels and I just want to know, I want to know the game plan, Matt. But when I get like this and I've gotten pretty good at being able to identify it, and this is me identifying it right now. When I get wishy-washy and it's not so clear to me even what the picture perfect play is on the open, again, it boils back to know thyself and ME. Again, this is in reference to me, literally me, but also managing expectations. You probably get the sense of that in my voice. Probably get the sense from that in my voice. So that's the IWM. And we're past 9:20 on the clock now. So speed run through the core list here. Where's Apple opening? Let's go back to an hourly here so we can kind of see things a little bit more granular, and then we'll go. Whatever, I could do it here. Maybe not. I can do it here. Just trying to reduce the number of days of data that we're looking at. 20 is fine. Okay, so 189.24 puts us here, right? So opening towards the highs of the prior day session, basically. Tuesday was that, this was this move lower. So gapping green over red, that's important. But yesterday was a hammer from the daily perspective off of our zone down below. So I think Apple could be a player for upside. Apple could be a player for upside as long as we're over 189.24. That's your speed run level. We'll keep it brief here. Netflix caught an upgrade, and obviously with the broad market breaking out, gapping up on CPI as well. As long as we're over 441.50, looking for pullback buys to the level for a higher low or continuation up and over 446.50. Next up, we've got Tesla. We talked about this last night in the Zoom call for the course member thing that we did. But this, as a double bottom, was going to be enticing up and over that 269.60. The target would have been 275. That's mission accomplished already. So that trade's off the table as something to unfold. Gap rules are much more in play here as opposed to your Apple and Netflix. So what would the level be? I would want to see 275 hold. Why is that, right? If you think about this technically could have been bear flag consolidation if we remained here and looked for lower. If we're getting some acceptance up here over 275, any shorts who are positioning down here get screwed. This is a daily higher low, and now we're back in range looking for follow through over the top. So 275, 281.75 are the two key numbers for Tesla. Google, unfortunately, did not give us that rejection lower high under the 116.50. Amazon made up for it. Amazon was solid yesterday, so there was that. But for the most part, Google, higher low back above the level, gapping up now into this overhead gap. This is what I would think we want to contend with. So gap rules in play, but either way, it's the resolution either up or down of a gap. So just note that in Google. 118.30, 119.40, downside gap closes 117.55. 117.55. Okay, so it's gap galore out of Google. Gaps galore out of Google. Next up, Metaverse. What's going on with Zuckerberg's Fantasyland here? They were chanting for it in the Discord yesterday. Everybody was chanting for Meta here. Wife of Wall Street was in there. We had Sammy Sams. We had a bunch of people chatting about Meta yesterday, and there was a solid move that unfolded. Gapping up this morning. Beautiful. If we think about the daily time frame chart, right? This technically was a level to beat. Break, retest, held it for a higher low, getting that continuation in the upward direction. Prior high of day 300. If we can pull back, you want to see 300 be your first line of defense. Anything beyond that, anything beyond 300 is 297.25. If either of those two levels are tested, you're looking for pullback buys at each of them. Here and here, I would not be trading Meta short in the downward direction. We know that we also have overhead gap to continue to close up towards 307.50, really speeding it up now that we're within the 5-minute time frame window for the open here. NVIDIA, not really loving NVIDIA. Technically, we probably should have an appropriate level in here around 432, so let's do that together. There we go. Let's get rid of some of this. So 432, to me, the first look here, honestly, is like if we do rally a little bit, I would look for rejections off of 432. It's been too balanced. It's too neutral. It's too nothing going on here. Like the better longs, as we know, and even that at that, we have this target, but the better longs are a break and retest above 432, to target 436.50. So that's your upside. I would want to see a break and retest above that level. If we just rally into it, I wouldn't be chasing longs here. You guys know this by now. Would not be chasing longs here. Instead, would be looking for this type of deal. Right, so double top, head and shoulders, that's like a triple top or whatever. You guys know the deal, right? You guys know the deal. Next up, Softy, and then we're going to tune out so we can digest this gap on the open here. What is Softy doing? It's gapping into the gap. So double gap, very similar to Google from that perspective. Let this thing simmer out. You want to see this level resolve. It's almost the opening print. We're close to it. 335.23. I unfortunately cannot be precise and bump that to 25. I probably could, but it's the high of this bar, right? That represents a gap. So there's that, and then there's 337 on the upside as your upper target. If we do pull back, what's the level that you want to see hold? Well, if you're a bull out of Microsoft, you don't want to see it underneath. Oops, whoa, sorry for the zoom there. Let's zoom that back out. There we are. 333.50. This is the level, right? It's got to produce a higher low above that. Can't afford to go underneath and get back down into this zone here. All right, so really don't want to see anything deeper than a gap fill reversal on the downside out of Softy. 333.50. All right, next up is Amazon. Last but not least, the Mini Beast. Beautiful little moves in here on the open. That was a solid little look. But for now, what else do we see? Nice little recapture of the level, right? For the most part, I'm liking the idea that this held, first and foremost, for an intraday higher low. And then we also are gapping up and over this in here, 129.75. So right back to the top of this as a balance range. Remember that our levels almost split this into even thirds, 1, 2, and 3. More bullish the more time we spend up here, more neutral the more time we spend in here, more bearish the time we spend in here. Where are we gapping towards, right? Strong recovery effort off of the bottom, back up to the upper portion of that range. Has to strike me as more of a bullish indication than a bearish one. Ideally, 129.75 is your support for this morning session. All right, 9:28 on the clock. I wish I could hang out more, but I want to be full focused for this open. That way I can, number one, look to take action if there is an actionable setup, or number two, just make sure I don't get myself into trouble. Make sure I don't get myself into trouble, meaning getting overly aggressive on a position. This will require some focus here. So that's going to wrap it up. I appreciate you coming in and hanging out for the show this morning. Paul, Darth Buddha, John Taylor, Starlight, of course, John Cardozo, Chris, if you're still out there, appreciate you coming out to the show. Lee is in the building, Jay Hicks, VR, appreciate you all. There's too many to even name at this point on the morning streams, but thank you all. Stay green out there. Have a green trading day. I will see you in the next one. Look out for a video this afternoon for a recap of the midweek market update. With that said, adios.